Welcome back to another GT Homes exclusive. One of the questions we often hear is, what is a mortgage stress test? Great question. A mortgage stress test is a rule established by the Canadian government to ensure that homeowners can afford their mortgages even if interest rates go up. So it's essentially here to protect you. It was designed to determine whether borrowers can afford their mortgage payments and prevent Canadians from taking on too much debt. You will need to pass the mortgage stress test if you are buying a home, refinancing your mortgage, getting a second mortgage, or applying for a home equity line of credit. It uses a minimum qualifying rate to determine if you qualify for a mortgage. This means the borrower has to be approved for a rate they were given by their lender plus 2% or a standard rate of 5.25%, whichever is higher. For example, if your lender offers a rate of 3%, they will use the 5.25 as the rate in your stress test. However, if the offered rate is 4%, the rate in your stress test will be 6%. To determine if you meet the minimum qualifying rate requirements, your mortgage provider will examine the mortgage amount, the current interest rate, the mortgage amortization period, your household income, any current debts, and housing costs, including condo fees. To determine what you can afford, your lender will calculate two ratios, including the gross debt service ratio, GDS, and the total debt service ratio, TDS. The gross debt service ratio is the percentage of your pre-tax income that will go toward housing expenses, such as the mortgage, utilities, and property taxes. This percentage should not be higher than 35%. The total debt service ratio includes all of your outstanding personal debts, such as a car loan, credit cards, lines of credit, and other existing mortgages. This ratio should not be more than 42% of your pre-tax income. The GDS and TDS percentages required by your lender vary based on your preferences and protocols. Generally, the lower your rate, the more likely you are to get approved. Here's an example. Let's say you want to get a mortgage for $400,000 at a rate of 1.78%, with monthly payments of $1,650. Your lender will calculate your potential future spending based on a rate of 5.25% and monthly payments of $2,385. If this monthly payment meets the requirements for your gross debt ratio and total debt ratio, you will pass the mortgage stress test. While it's understandable to feel concerned about this test, there's no need to worry. It has been designed to ensure your success as both a homeowner and investor. The mortgage stress test ensures that you're financially prepared for the possibility of interest rates rising. This protects you as the investor and the lender. Real estate is a long-term investment, and paying off your mortgage can take time. You need to be prepared for interest rates to fluctuate over time. Use the stress test as a guide to ensure that you're ready to buy your next home, no matter how the market changes. To learn more about the process of buying or investing in a property, be sure to contact one of our GT Homes agents today. They will assist you with your buyer's journey and will give you insight into the GTA's real estate market. Thank you for watching another GT Homes exclusive. Remember to subscribe and to visit us at gtahomes.com.